Hi everyone. It's going to be probably a long video tonight because I'm not writing any extra analysis. Two long surf sessions again today. Use my 511 in the first one, 6.2 in the second one. So waves are still pumping, and that's priority. And I have a meeting I have to go to with clients on Maui early in the morning, and therefore I just don't have time to mess around. So just a video today, and today was today on Maui. Good morning to everybody else who is actually watching this. The Nasdaq yesterday for you guys sold off on very large volume, and not only that, I got what I considered the quadruple fecta. The QQQ, the Nasdaq is all sold off on heavier volume. On top of that, the PSQ rallied on heavy volume. The QID rallied on heavy volume. The TQQQ sold off on heavy volume. The SQQQ bounced on heavy volume. That's a confirmation across the board, and you can see in the SPY, the diamonds, and then looking at the Dow Jones Industrial Average and the S&P 500, that volume was heavy across the board. The SRTY, the SDOW, IWM, UWM, TWM, and even though it doesn't show you, the Russell 2000 had huge volume today. So today's sell-off was extremely gnarly, and due to that, we are going to begin a round of hedging like we always do after a nasty break. We did this in February, we did this in April, here we go again. And it's the only thing to do whenever you're heavily long, anywhere from 70 to 80% I am in my two main portfolios, and then the options portfolio, I'm only about half, if even, invested in that as I continue to monitor that methodology of going long calls and or straddling, strangling earnings plays. But anyway, volume is huge, so therefore we're beginning another round of hedging. 5% SQQQQQQ is going into the non-risk account. The reason for that is I normally like to play volatility, but oddly enough, volatility really did not jump a lot today, which means that there was no fear in the sell-off, which makes me think the market's really complacent up here. And folks, that's not good news. So if that's the case, I'm getting UVXY at a bargain. You can go long UVXY or you can go long the calls. I don't care. It's up to you. I'm going long UVXY, 5% in my risk account, and SQQQ 5% in my non-risk account. If we're down in the market again tomorrow, another 5% of UVXY will be added to the risk account. Another 5% SQQQ will be added to the non-risk account. And this will continue until we get completely even hedge, and then a direction of the market is resolved. The way that this market is, we've been going up for way too long. A pull back to the 50-day moving average only makes common sense here. Then if we find support, if we do or don't, I don't know. No one can predict the future. The best laid scheme of mice and men a gang of gaffigly. Forward though I look, I cannot see Robert Frost, and that's so true. How in the hell can anyone know unless you're Goldman Sachs or J.P. Morgan or a huge billion-dollar firm what tomorrow holds? Only they have the funds available to actually move the market and be able to predict the market, because they're going to be moving the market. Right now, it's no man's land. I expect some choppy consolidation minimum. A start of a bear market, I don't know. Start of a 20% correction, I don't know. 5% support at 50, 200-day moving average, I don't know. You don't know, and nobody else you talk to knows. And if they tell you that they know, you should run for the hills, folks. So bottom line, market looks choppy up here. Get ready to, hold steady. This is good for me if we're going to continue to have a QE environment, as this will allow us to separate the leaders from the laggers. And on that note, we do have some sells tonight. The only full sell, though, which is very odd, I thought we'd have more, is Fossil, and that's because Fossil is failing the gap low, and I like to give these a little bit of porosity at the lows, but by that I mean anything below 105 probably would have been problematic with the low day close, and we got that. 104.44, Fossil is out. The big sells is FIG. FIG has turned a quick gain back into a loss and is closing below the 10-day moving average on strong volume. So that now that we have a loss, I'm going to get out of 75% of that, as that's also, even though it's a good position, it seems speculative. And SSYS, very disturbing pullback in SSYS. It's still holding above the low a day of the actual signal day, but thanks to the gap up, we got a bad, quote, quote, bad fill. And because of that, we now have a loss. So that's going to be a 75% sell. Take two is still holding above the 50-day moving average, which I like, but the 1588 close is below the 1597 open, still above the 1587 low a day, so it's a hold. And since it's above the 50-day moving average and only slightly below the 20-day moving average, I'm only going to sell half of that. But if you have a little bit, if your sell is borderline 50%, go towards the overside of 50%. And then also RPT is closing below the 20-day moving average, so that is a 25% sell. LGF is closing below the 10-day moving average on very strong volume, the strongest volume post the initial move from our long signal, so that is a 20% sell. No need to wait for the 20-day moving average. And OCN is also selling below the 10-day moving average on strong volume. No need to wait for a further move below the 20-day moving average. We'll start getting rid of 20% there. And then there are stocks on watch. BERY, it's closed below the 10-day moving average, but that intraday tail at the end and overall still green bop makes me think that this stock can easily find support based on the previous accumulation. Close below the low a day of today will be a 20 to 25% sell, depending how bad it looks. BEAV, we're going to hold steady here, even though it's closing below the 20-day moving average. However, another down close, especially below the 50-day moving average, will definitely warrant 25, 33, 50% sell. PERI, another close below the 10-day moving average on heavy volume will warrant another sell, or a close below the low a day. So that is on watch. And BX, also a heavy volume close below the 10-day moving average. However, big rally off the intraday support on heavy volume. If it bounces here, great. A close below the low a day, however, a 20, 25, 33, 50% sell, depending on the volume, will be initiated. And then also GMCR. GMCR is also closing below the 10-day moving average on strong volume. However, it also has a good intraday tail. Still is holding up with the green bop, and overall volume wasn't that big. However, a further close on, let's say, heavier volume below the 10-day moving average, or a close below the low a day on heavy volume is definitely going to be a 25, 50 to 75% sell. So as you can see, we got some sells, and the other one I think I didn't write down, but I needed to write down was WDAY. WDAY is closed below the 10-day moving average on heavy volume. However, after hours of earnings, it's gapping up to 67. So once again, if it closes below the 20-day moving average, only then will it be a 25% sell, since it is gapping up in the morning. So overall, there's a lot of stocks for us to watch, to be on the lookout for further sell signals. The most important thing, though, is to take those signals, to start to get hedged, and to be cash heavy here in your mind. Don't be looking to get long breakouts immediately unless the market's moving up or it's a long consolidation pattern. But if we're up tomorrow and volume's much lower and we don't have breakouts across the board, don't just start buying stocks to buy stocks. Let real signals materialize before doing anything. So be careful out there, everybody. We're going to begin our round of hedging. Also wanted to show you that one of our two short positions, I told you this was a bear market. They'd be perfect shorts. See what happens. ARRS. As you can see what happened to it, it is down 7.63% today, a total crash. That other one, CWST, though, is holding right on in. So technically, if you were loading up on this one, you could buy more or short more here, waiting for the potential breakdown if this market weakens. But ARRS is normally what you like to see. And just as a reminder, these are our still current short positions in AVB and ASTM. ASTM we've been holding on to for almost a full year now. I still would love to see it go to zero.